a business involves not only the day-to-day operation but also the responsibility of fulfilling legal obligation. Like every year, without exception, every private limited company in India, no matter big or small, is required to complete the annual filing process. So whether you're currently managing private limited company, considering to register one, or even thinking about transforming an existing company, it's crucial to understand and carefully carry out the annual compliance requirements mandated by the MCA. This means you have to send in your yearly returns and financial statements to the Register of Companies, which is ROC, and failing to do so can result in some serious penalties and legal repercussions. Hi, my name is Charles, and in this video we'll discuss about all the essential aspects of annual filing and some crucial deadlines and the process involved and much more in detail. When we talk about annual returns filing or filing annual returns, it encompasses crucial information about the company's directors, shareholders, registered office address, share capital, and any changes in the shareholding patterns that might have occurred. On the other hand, financial statements offer an overview of the company's financial performance, which includes its income details, expenses, assets, and liabilities throughout the year, and much more. By submitting these important documents, companies are making sure that they follow the rules and regulations and show transparency in how they run their business. But there are a few more compliance that you need to be aware of because they can have an impact on your business. These include getting a business commencement certificate. New businesses need to get their commencement certificate within 180 days after starting their company according to MCA rules. This is only for companies registered after November 2019 with a share capital. If you don't get the certificate on time, there are some big penalties. The company could be fined up to ₹50,000 and the directors might have to pay ₹1,000 each for a day if they are late. Appointing an auditor. An auditor must be appointed within 30 days from the date of incorporation. Also, you should include all this information regarding the appointment of the auditor in the annual filing of your company. And if the company fails to appoint an auditor, it won't be allowed to commence a business. Also, there is a penalty of ₹300 per month. It's important to make sure that all the necessary requirements are met. At Zolbit, we have experts, auditors, lawyers, CAs to assist you in incorporating your private limited company, and maintaining an annual compliance through our in-house CAs prevents you from penalties. To know more about this, I have tagged the link on the top. You can watch it and know better. Filing income tax return. For every company, it's important to ensure that the tax returns are filed before the due date. But if you happen to miss the deadline, do not panic. Just make sure to file a belated return as soon as possible to minimize any penalties. Holding an annual general meeting, which is called as an AGM. ROC rules require holding the annual general meeting within 6 months after the financial year ends. Provide all the AGM details in the annual report. This means September's end is the deadline for companies ending their financial year in March. So it's not just about filing papers, you gotta keep those meetings in check too. Submitting Form AOC4. Now, Form AOC4 is an annual report that companies must submit, including financial statements and disclosure for the Register of Companies. File Form AOC4 within 30 days of your annual general meeting. If the AGM didn't occur, you have 30 days from its scheduled date. Timely filing is very important for transparency with stakeholders. Not filing AOC4 might result in a penalty of ₹200 per day of the delay. Submitting Form MGT7. Just like AOC4 form, companies also need to submit MGT7 form to the ROC. The MGT7 form is an electronic form issued by the Ministry of Corporate Affairs to help companies file their income and expenditure data for the year. It's important to file the MGT7 within 60 days of the annual general meeting, otherwise there's a penalty of ₹100 per day as a default. To submit the form, digitally, sign and include your DIN, which is Director Identification Number, or PAN if you are a manager, CEO or CFO. You must also involve a professional like chartered accountant or company secretary. They verify documents, certify information's accuracy, and provide their membership number and MCA status as a fellow or associate. Filing for DIN e-KYC. According to ROC regulation, a private limited company needs at least one director who must have or possess a DIN, which is the Director Identification Number. This unique number identifies individual as current or prospective directors of a corporation. To obtain a DIN, directors should provide a unique mobile number and email address and a complete DIN e-KYC with a specified time frame. Failing to complete DIN e-KYC on time might result in a penalty of Rs 5,000. Drafting Director's Report. Now, Section 134 mandates that all necessary information to be submitted without fail as part of the annual compliance. So it's important to make sure that you stay on top of providing director reports to both ROC and MCA on time. These reports keep authorities informed about your company's financial performance and activities. This ensures compliance and helps prevent future penalties or legal issues. It is very important for businesses to follow regulatory requirements to maintain a transparent and well-functioning environment. Timely submission of required documents like annual reports and director reports is crucial to show financial responsibility and adherence to the law. You focus on laying a strong foundation for your business, growing and scaling your business, while we at Solvit and our experts will take care of your compliance and prevent your company from all serious penalties and legal repercussions.